Good morning, welcome to Good Money Guide TV. We're here with Kieran De Silva from Primary Bid. Today we're going to have a chat about new issues, IPOs and placings, who they're suitable for, what Primary does to bring this market closer to retail investors, the main risks and benefits, and also how you can get involved. So Kieran, welcome. Thank you very much for joining us from Primary Bid.
Thanks for having us.
So we're going to have a quick chat about the new issue IPO market. And obviously there's new issues, IPOs and placings. Do you want to quickly talk us through the difference between those three terms?
Sure. So a new issue is when any listed company issues new shares to raise funds. That includes IPOs and placings. An IPO is when a private company lists on stock exchange for the first time, and a placing is when an already listed company issues new shares to raise new funds. Historically, placings are only available to institutional investors and high net worths.
Sure. So on that, on the basis that traditionally, institutional investors get first dibs on these sorts of offers, are they suitable for retail investors? Should a private client be getting involved in the new issue and placing market? And I suppose, what are the advantages to them of doing so?
Well, the new issues are often seen as the hottest deals in the market, and historically have been the preserve of institutional investors, with retail investors being excluded. We view that retail investors can buy stocks and shares via a stockbroker at market price, so it's only right we're able to buy those same shares at a better price in the primary market.
Okay, and what would you say are the main risks to a private client getting involved in this sort of market?
As with investing in any stocks and shares in the stock market, the main risk is a share price performs badly after a transaction.
Okay, and of course, but there's other things as well, aren't there? Like liquidity, obviously, if it's if it's an issue from a FTSE 100 company, that there's going to be liquidity and volume within the market. But the further down you go, the harder the shares are to sell afterwards, aren't they? So what's the sort of risk for, what sort of returns can they expect to make within what time frame, and what should they be mindful of after they've bought into a new issue?
So I think with any investing in stocks and shares, there's no guaranteed returns. But however, there's lots of academic studies showing that IPOs overall outperform the wider stock market.
Yeah.
And placings are done at a discount to that market price. So there's an embedded delta to the overall stock price performance. Okay.
So that's touched a bit on the risks, but what about the benefits for someone who sees an attractive new issue? So on your platform, for example, you send out a notification saying, company X, Y, and Z is issuing new shares. Why should an investor buy through you rather than just go into the market and buy them themselves?
So the main benefit of a placing is this discount to market price. This is the first time anywhere where an everyday retail investor can get access to a listed company share at a discount to market price. If they buy via a stockbroker, that's called the secondary market. You're just buying or selling at the share price.
Okay.
Via new issuance or the primary market, that's when you can get this access to a discount to share price.
Okay. So why would a company issue shares at a discount?
So when a company is looking to raise new funds, for example, BP is looking to raise new funds to drill a new oil well, they need to go and raise that from both institutional investors historically via the investment bank. And those institutional investors, it's really similar to sort of a bulk buy discount. They're investing huge amounts of money, and therefore they get that discount to the share price. And we're simply allowing the retail investor access to that same discount.
Okay. And for a retail investor or a private client wanting to get involved in new issues and IPOs, where should they look? How do people find out about what companies are issuing new shares, and then how can they go about doing their due diligence on these companies to see whether or not they're worth investing in?
So high net worth individuals often have access to these via their private client brokers, access to placings, and the large IPOs like Royal Mail, stockbrokers often distribute them to retail investors. Primary Bid gives access to a much wider range of all placings which we do for our platform to all retail investors, not just high net worths.
Okay.
So the best way is to sign up to Primary Bid and get a notification on all of our transactions.
Okay. And so the transactions you offer, London Stock Exchange also publishes all the upcoming new issues and the most recent new issues as well. Do you cover any issues outside of what's published on the London Stock Exchange website?
So generally, placings are only announced in market once a transaction goes live. There's no advance warning, essentially. In a way that an IPO, you often have sort of lead time when you know that deal is coming to market. For a placing, the first time investors normally find out about it is when there's a public press release and the transaction is live.
Okay, that's interesting. And I was a stockbroker for a while, a long time ago, and we did partake in a few new issues. And one of the things we found that was actually our private client base was almost like the last informed. They were the last to know about them, and also they got the smallest issue afterwards as well. And one of the things that we sort of found was that the more access retail clients have to a new issue, the less demand for it there is. So generally, if there's a hot new issue that's going to, almost certainly increase in value when it comes to market, there's an opportunity for institutions and high net worth clients to stag it, buy it and sell out immediately. But we saw a sort of trend whereby new issues where institutions weren't overly interested, it wasn't oversubscribed, so there was a bit of an allocation left, and then that got put out to the stockbrokers, and then that got put out to the retail customers. Do you see that sort of trend now, or is there more demand for a private client, or is it still very much the case? And also, how do you deal with allocations? So if you're involved in a new issue as well, and there's large institutional demand, how do you ensure that the private clients on your customers get a fair allocation and don't get scaled back?
So I think this selection bias that you're sort of referring to has been a key issue historically with these transactions, whereby retail is often an afterthought by the investment bank running the transaction, and institutional investors get the hot deals, and the retail investors are only getting an allocation where there's funds still required. The key difference with Primary Bid is that, especially now, we have the commercial agreements with London Stock Exchange and Euronext, the leading pan-European stock exchange. We're meeting the listed company at the start of the fundraise process. So when the company is thinking of raising funds, retail is not an afterthought. They're thinking about them up front. Okay. And Primary Bid are engaging directly with the listed company, so that there's no notion of getting zeroed out towards the end if it's a hot deal. And to your question on allocation, we'll generally engage with the listed company, and they'll have an idea of how much they want to allocate to retail upfront. Yep. And we'll agree these allocation policies upfront. So as an example, if the book is 2 times oversubscribed, and the investment bank may choose to allocate more to its long-only investment funds and less to its more hedge fund clients, and that's fine. The bank has the sort of authority to do that as it thinks is best makes up the book. However, if it's 2 times oversubscribed, Primary Bid would expect to get 50% of its allocation on that transaction, as opposed to being zeroed out, and that's because of the relationship directly with the issuer. Okay,
so and I suppose essentially you're pooling a lot of private client orders, whereas before it perhaps would have been 10 different stockbrokers applying on behalf of 200 customers. You then
exactly
are you essentially saying that you're an institutional applicant as well, and then filtering that out to...
Primary Bid automates that aggregation of retail demand, and we face off to the issuer or the bank as one FCA registered institutional counterparty.
Okay. So that's what you do. Let's just sort of quickly touch on how you do it. So I want to get involved in a new issue. I open an account with you, and that's then company XYZ is issuing shares, and I go, I'll have, for the sake of argument, I'll have £10,000 worth of that. What's the process? Who looks after my money? Who looks after the shares? what happens after the shares, after the transaction's done? When can I sell them? And let's just talk about costs as well. What are the costs?
Sure. So at a very high level, primary bid connects everyday retail investors to listed companies raising capital.
Yep.
And we do that when a transaction is announced. The primary bid user will get a real-time notification so they can learn about the transaction, they can subscribe for an allocation, and they can receive those shares commission-free. In terms of costs, we don't charge...
Should just touch on that. I mean,
Sure.
IPOs and new issues are generally commission-free, aren't they? It's the issuer that pays the institutions for raising the money. So generally, private clients wouldn't have to pay commission on a new issue or a
It really
transaction.
depends on their private client broker. Some will, for access to these hot deals, sometimes
Yep.
commission is charged, while primary bid does not charge the retail investor any commission. Where we get our fees from is we charge the listed company a
Yep.
fee for raising the capital.
Okay, and then the process. Where do I send? So I want £10,000 worth. Do I send my money to you, or does that sit in my stock brokerage account? And do I need a stock brokerage account as well?
So when you transact through a primary bid, you pay then and there via your debit card.
Yep.
That sits in a segregated client funds account.
So that's pre-allocation.
Pre-allocation.
Yep.
Segregated client funds account at Barclays, so there's no credit risk with primary bid. And once you receive your allocation, you can settle into your stockbroking account of choice. So whether that's Interactive Investors, Barclays, Hargreaves, Lansdowne,
Okay.
you choose.
Okay.
And if you don't receive your full allocation, you'll receive a refund of a balance.
Okay. And then, so when should that show in my stock brokerage account? So say these new shares issue on, 9 o'clock when the market opens on Monday. When will I see them in my stock brokerage account? And when will I know my allocation? And when can I either sell them or know my position?
So once the results of the fundraise are announced, then we'll send out allocation confirmations to all the investors. Normally it's 3 days after that results of the fundraise announcement where the shares are admitted to trading, and at that point they can start to be settled into the underlying retail investor stockbroking account.
Yep.
In terms of exact timing, it really depends on the stockbroker and their processes. For many of our stockbroker partners, they're settling in same day of admitted to trading, and others take longer.
Okay, but you should know your allocation beforehand, shouldn't you? So you should know.
Exactly.
how many you have.
As soon as shortly after the results fundraise press release is announced, you'll receive an allocation confirmation.
Okay. And of course, it's not a new thing, investing in new issues or IPOs or placing. People have been able to do it, ever since there's been a stock market. But obviously, you're a sort of one asset class provider. Why should people go through primary bid to access new issues and IPOs rather than just phoning up their stockbroker and saying, "Do you have issue to this? Do you have access to this? Can I get involved?" So
we'd see it mainly being high net worth individuals who have access via their private client broker to these placings. Historically, the everyday retail investor tends to be excluded, and the first time they hear about it is when they see the results of a fundraise press release being announced next day, by which time it's too late. So in terms of subscribing via your stockbroker outside the secondary market, just at full market price, we see primary bid for the everyday retail investor as the only real place to get access to these placings on a large scale.
Okay, and there's there's been a couple of providers that have tried this before. There's been significant changes in the AIM market. I was talking to Justin Stewart Urquhart from 7IM. He's one of the original founders of the AIM market, and he's saying it's going through a lot of changes. It's not quite what it once was. So what are your plans to win in this market? How are you gonna as a business win?
Yeah, sure. So I think it's useful to note that we've done 50 transactions through the platform already, raised over 65 million sterling through the platform. We've got commercial agreements in place with London Stock Exchange and Euronext. We recently completed our venture capital Series A with leading investors of Pentec VC, who are early investors in Nutmeg,
Right.
and Outward VC, who are backed by Investec.
Yeah.
And alongside our VC-led fundraise, we made key appointments, including James Deal from JP Morgan and Eric Lowe from Goldman Sachs to lead on sales and business development, respectively.
Okay, so that's a fairly broad board that you've got there. Does this mean so the Euronext connection? Does that mean you offer access to European issues?
Our agreement with Euronext covers 9 European geographies in continental Europe, and we're due to launch in France in 2020.
Okay.
So at that point, that will initially be offering French placings to French investors, but the idea over time is to cross-pollinate.
So UK investors at the moment can't invest in
not
IPO.
at the moment.
And what about the sort of big, exciting US ticket? Will people over here ever get access to new issues in America? And Japan and Asia and so on.
Yeah, when you look at the retail capital markets in the US and Asia, it's even bigger than that in the UK and continental Europe. So further geographical expansion is definitely on part of our plans.
Okay. And as well as looking abroad to access new markets, there's a big movement in the unlisted company space at the moment. Everybody wants to invest in well, I say everybody. There is a subset of investors who want to invest in VC funds to get early access to high growth fintech companies, much like yours, and equity crowdfunding as well, where there's a movement for smaller investors to perhaps invest in sustainable and ethical companies. Do you have any plans to try and aggregate that market as well, and as well as providing access to listed stocks, provide access to unlisted markets?
So Primary Bid focuses on publicly listed companies, and as such, we don't cover private companies. We see the public stock market really solving a lot of the issues with investing in private companies, such as lack of liquidity, lack of transparency, lack of governance standards. Hence why we're focused on retail investors investing in publicly listed companies.
Yeah, and of course I think there's, obviously the AIM market is very high risk. The further down the market cap you go, the higher the risk. But unlisted stocks are probably at the highest end of the risk.
Yeah, that's generally the case, and you don't have a secondary market for your shares. If you would like to sell. For publicly listed companies, you have things like the listing rules. For AIM, they have nominated advisors, brokers, etc. Okay. They have disclosure requirements. They have to announce if you lose a contract, etc. When you move to the world of private companies, all of those listing rules and just don't apply.
Okay, that's great. And just one final question: who's it for? Who should sign up? Should new issues be a very small part of your investment portfolio? Should you be investing in new issues if you don't have any exposure to the stock market, or is it, in your view, a relatively high risk product for sophisticated investors or for people who already have a balanced portfolio?
So we see Primary Bid really opening up the market to everyday retail investors, not just high net worths or sophisticated investors. In terms of subscription amounts, you can subscribe on Primary Bid from as little as £100.
Yep.
In terms of your overall portfolio, these are obviously single stocks you're investing in via Primary Bid, or when you participate in any placing or IPO, and that should always be part of a balanced portfolio.
Yeah. So diversification is key. Don't put all your eggs in one basket.
Exactly.
Ever. Yeah, I think everybody, that's the sort of key lesson about investing. People need to understand that you need to diversify. All right. Well, Kieran, thank you very much for talking to us. That was really interesting. Thank you very much for watching this episode of Good Money Guide TV. We'll be back with another asset class to cover shortly. Thank you.